Welcome to You and Your Money, empowering you to reach your goals with tips to help you plan well, invest well, and live well. I'm Jim Zahansky, Principal, Managing Partner, and Chief Goals Strategist at Weiss Hale & Zahansky Strategic Wealth Advisors.
Now on to today's topic. Jim, what are some of the developments that have impacted wealth management and financial planning in this year, 2023?
Yeah, one of the noticeable shifts, and we were just talking about it, has been the rising interest rates. Higher rates this year have given opportunities for managing short-term holdings, mostly cash holdings, giving individuals a chance to earn higher interest rates on cash reserves. So, all the way from some savings accounts to certificates of deposit to U.S. Treasuries to money market funds have all paid significantly higher than they have in the past. We've had CD rates above 5%. That's one of the positive effects of rising interest rates. The other is that when you have a rise in inflation, those of you on Social Security that are listening, you've seen noticeably larger Social Security increases in 2022 and in 2023 than you have in the past. These are aimed at offsetting some of the increased cost of living that we were just talking about, particularly for those listeners that are retirees and depending on that Social Security benefit. And so that's one of the positive impacts of interest rates. And although they're likely to come down in 2024, that sort of impact it has on increased benefits and short-term cash savings has really been a boon to some who are saving in the banks and in using their Social Security benefits to offset rising costs.
Interesting stuff. How have monetary policy shifts affected investment portfolios?
This is, as I said earlier, in our investment committee, it's interesting. The Fed has been saying and using, I think, a much more data-driven approach to increasing interest rates, particularly in 2023. In 2022, they knew they just had to keep increasing. In 2023, it's been more of a data-driven scenario where they're looking, is inflation coming down, and if it is, do we need to keep raising at such a high rate? And they obviously lowered the pace and the rate of increases in 2023. So that was, I think, for us, to give us an interesting opportunity set when we looked across the markets, right? We were able to use cash instruments, treasuries that were stable and paying at higher rates, and we were able to mix those, with value type stocks that are paying higher interest and dividends than they had in the past, and growth stocks in 2023, particularly in the tech sector, really started to take off. So all of these combined allowed for fairly significant portfolio performance this year from our investment committee as we watched monetary policy, interest rates, and inflation start to move.
Jim, let's talk about the Secure Act 2.0, which introduced retirement planning changes. Elaborate on that, please.
Yeah, this was some big legislation that came through, late last year through Congress, and it really it brought some significant changes that will go into place over the next few years. But for 2023, it meant things like the introduction of student loan payment matching contributions from employers, and it also raised the required minimum distribution age to 73. And if you were born after the year of 1960, it raised it to age 75. So have an increasing required minimum distribution age, which has been ongoing. So meaning if you have an IRA, you don't have to take a required minimum distribution now to age 73, and if you're born after 1960, it's age 75. So it's really benefiting, this act really benefited those planning for retirement and managing tax-deferred funds overall.
The human aspect of financial decisions crucial. How has psychology influenced financial planning this year?
I think it influences it every year. Our job as financial advisors and our team and our advisory team, which consists of certified financial planners and those who have experience in financial planning, part of our job is to manage psychology of clients, because what happens is many clients and investors tend to react favorably when markets are up and want to jump in to buying at that point. And that's okay. However, it's much better to buy when markets are lower. And so, we've sort of we take the idea of looking at long-term risk-adjusted returns in our investment committee. We look at 5 and 7 year returns, and we try to manage psychology through the ups and downs of markets, because you can't control the ups and downs. You can only understand when they may or may not be coming and how to navigate them. And we take that very seriously, and we try to align it to our clients' goals and their values, because each person is different. Each client has a different investment strategy that aligns to their own goals and values. And so I guess to get back to your question on psychology, it's just sort of taking the client's goals and values and trying to help them manage through when the ups and downs of the market so that we can help them achieve their goals. And that's really what personalized advice is all about, and what we really strive to provide to our clients.
That's a great point. Understanding the psychological aspects that drive financial decisions has become increasingly important. Recognizing clients' goals, values, and concerns allows us to offer more personalized advice. So, Jim, can you elaborate more on the emphasis on client values and the goals at Weiss, Hale, and Zahansky?
Yeah, I mean, so clients basically think about their needs, their preferences, their values. I mean, that really is the heart of financial planning, and it deeply resonates with our approach here. I mean, we really try to truly understand our clients' perspective. So, I'll give you an exact example. I mean, we pride ourselves on delivering what we call a plan well, invest well, live well process. And I'd say what makes that sort of unique is we really don't enact an investment strategy, the invest well phase, until we do the plan well phase. So do you have a significant financial plan? And what does that mean? It means, what are your goals? When are you trying to achieve them? Do we have an income plan for retirement? When you retire, how are you getting income? How is that managing things like inflation? How is it managing through the ups and downs of the market? That's what a financial plan is. And so if you're working with an advisor, ask them for a retirement income plan if that's a goal of yours. If you're looking to buy a house in the next few years and you're trying to save for that, be sure your investment strategy manages that time horizon. And so that's specifically how we connect the invest well phase to the plan well phase. And each of our clients has a different connection for both what they're trying to achieve, that's their goals, and how we invest the money. That's the invest well phase of what we do. So hopefully that helps you answer that question about our emphasis on clients' values and goals.
I realize people are a little bit more concerned about trimming trees and buying gifts for the next couple of weeks or so. But do you find people at the end of the year, or correspondingly at the beginning of the new year, thinking about maybe a financial plan? And that would include not just new investments, but maybe also reallocating some of the current investments in the portfolio?
Yeah, I mean, great question. Clearly, you at this point in time, I mean, to your point, most people are focusing on the holidays and spending time with family, but it is a good time to think about things like tax loss harvesting in your portfolio. And this is something we do for all clients, have you done the right portfolio management? Do you need to rebalance your portfolio based on your risk profile? These are all questions to ask yourself now. Of course, after the first year, you lose that tax loss harvesting opportunity for the tax year. But if you don't get to it in November or December, certainly something you should consider for next year. So I think you're right on, Wayne, that people want to and should want to evaluate their overall financial plan, inclusive of these sorts of tax efficiencies, inclusive of these sorts of is your portfolio invested right, and then thirdly, just ensuring that you are on track against your goals. I mean, if you're retired and you have a fixed income, is the portfolio producing the income you need? And how will it look in the future is the heart of financial planning, and specifically retirement income planning.
Jim, you and I have done these shows for the best part of 20 years now, you and your money. And you just dropped a phrase on me I've never heard you use before, and I don't quite know what it means. And maybe you can clarify what tax loss harvesting is?
It's basically, during the end of the corn season, we go out in the fields and cut them down.
And then you shuck them and eat them.
No, yeah. So I mean, it's a concept similar time of year. However, right? I mean, you're basically looking at the portfolio and trying to understand do you have specific holdings that may not be necessary in the portfolio that have a loss. They've lost money since you've owned it, and if you take that loss during the tax year, you realize it is what we call. That's the language. We realize the loss in the portfolio by selling it. You in fact could have a positive tax benefit. So, say for example, you sold a home this year where you had a capital gain on it, and so you're trying to offset some of those capital gains with some losses, and that is something we try to do for clients if in fact that's a situation they're in, and that gets directly back to the question you asked me about how do we manage goals, and this is one way. If you specifically had a goal of reducing taxes, we would look at your portfolio and see if we can't realize some of the losses so that you can offset some of the gains you might have had. So that's what tax loss harvesting is, Wayne.
I remember back in the day, they would talk about diversifying portfolios, and that would include some international stocks. Are we as big on international now as we were 10, 20 years or so ago? Is it still a good idea to buy international?
I mean, it's always good to have a diversified portfolio, and we certainly own international. We're mostly focused on developed nations, so we're really not in non-developed nations internationally. But I would tell you this: we've certainly trimmed the holdings in international, largely because over the past 10 years, and I was saying to you, we focus on the long-term risk-adjusted return. So we're looking at 5, 7, and 10-year performance. When you look at the last 10 years, it's hard to believe that international has outperformed the U.S. It hasn't, right? Wildly underperformed the U.S. stock markets. So when you look at the indices, so it's certainly something to hold. And I'm not saying there aren't good opportunities there. There are. However, they're just have not performed the way the U.S. markets have performed over the last 10 years.
Jim, good stuff. Thanks for joining us today and sharing the insights of what's going on in 2023 as it wraps up.
Yeah, thanks for having me. Of course, it's been an interesting year in a lot of ways. It really tested the psychology of investors this year in the ups and downs of monetary policy, but it certainly has been a notable year in many ways, both from a policy and financial planning. And, I think from our team's perspective, we're really happy with where our clients have ended up for the year and that we've been able to deliver a personalized financial planning and investment strategy for them. And I wish you and all your loved ones an amazing holiday season, and can't wait to pick these up again into 2024.
Jim Zahansky talking about the most impactful financial changes of 2023.
That brings us to the end of this episode. Thanks for listening to You and Your Money. Find even more episodes, videos, and other resources at our website, whzwealth.com. Be sure to come back next week for more tips to help you live fearlessly and pursue your financial and life goals. Until then, live well. Weiss Hale & Zahansky Strategic Wealth Advisors offers securities and advisory services through Commonwealth Financial Network, member FINRA, SIPC, a registered investment advisor. Fixed insurance products and services offered through CES Insurance Agency. They practice at 697 Pomfret Street, Pomfret Center, Connecticut, 06259, and can be reached at 860-928-2341. Weiss Hale & Zahansky Strategic Wealth Advisors do not provide legal or tax advice. The tenured financial services team strives to support clients in achieving their financial life goals. For more information regarding wealth management and customized financial planning with Weiss Hale & Zahansky Strategic Wealth Advisors, please visit www.whzwealth.com.